Hello and welcome to Tokenomics. I'm Manisha Gupta. The world of crypto and finance has been abuzz with the idea of tokenizing real-world assets on the blockchain, which simply means converting the ownership of real-world assets like stocks, bonds, real estate and commodities into a digital token. This has even grabbed the attention of the US Federal Reserve, which recently released a working paper that explores the advantages and use cases of asset tokenization. Back home, the International Finance Services Center Authority has formed a committee to frame regulations for the tokenization of real and physical assets. To understand the impact of tokenization on world economy, we are now joined by Dilip, who is chairman of Bharat Web3 Association. Mr. Chenoy, hi, thank you so much for joining us. And clearly the world is buzzing for some time now. We have seen various banks talk about it as well. But even if you put aside many of these banks and institutions, there is this retail buzz as well. Even the crypto native place is talking more about tokenization of real world assets.
Yeah, so if you look at tokenization of real world assets, there are multiple things happening at different levels and across different industries. If I were to take three examples, right, and I'm going to take Indian examples. So there's a company in India that is actually tokenizing ships, right? So a ship is a large investment. And how do you actually break it up into smaller investments and then lease the ship to a shipping company so that the shipping company actually just pays the lease rental and the actual owners of it are fragmented across different geographies in the country and outside. And this is a real life example, and they earn a return on the asset as the usage goes up. Now, this is a very interesting model for large capital-intensive tokenization projects. The second example I'd like to take is from the real estate sector. So there is a company in Bangalore has actually fractionalized and tokenized a real estate combination of multiple flats, where many people are actually owning a part of one flat and they earn a revenue out of the rental that the flat gets, and in the long term they hope to be able to use the appreciation in the real asset value to gain returns. And the third is a very simple thing is happening in this thing, and a major artwork too expensive for me to buy. You do tokenization and then allow people to own fractional parts of that artwork going ahead. And I'm talking of non-financial kind of tokenization here.
Oh, well, absolutely. And there's just so much happening within the finance world as well. But, the US Fed paper also is exploring asset tokenization. According to you, as per your knowledge, how many countries or regulators, even banks, are looking at this when it comes to regulatory part?
So if you look at the financial sector tokenization of different assets that you hold, I mean, there are about 8 countries, if I look at it, who have active programs in this space. And even in India, if you look at this coalition of banks that have got together to form that independent company to look at the use of blockchain within the sector, even they are exploring the idea of how do you tokenize securities. Because once you do that, it's very simple, to track and to be able to fractionalize assets and get many more participants in the whole ecosystem going ahead. So 8 countries are definitely looking at that. 2 have done pilots, right? And many more pilots are on the way. Japan is far ahead of, I think they've actually even allowed startups to issue tokens to raise money.
So as you said, financial markets and banks, even countries are looking at it. But when we look at normal daily, day-to-day life, common people, where have you seen tokenization touching them and also traditional businesses for that matter?
So the real estate tokenization is one example where it is actually touched, let's say in Bangalore or in Kolkata, in India, it has touched the common man. The other aspect of where it has touched the common man is slightly financial, but if you go to, let's say, Flipverse and you look at it, you actually can tokenize your reward points and your other things that you're looking at. It's still in a very pilot stage, but any shopper there could actually, depending on what they buy, etc., they could get tokens. In the gaming industry, some initial forays have happened. So if you're a gamer, and there are a few 100 million gamers in India, for them it will be a very new experience actually being able to look at that. And the recent the GST amendment and putting tokens and virtual digital assets as part of the overall thing is going to give a fillip to that sector. Of course, art is very different. There are many artists here. And if you were to take NFTs as tokens, and if you look at it, maybe, it's currently restricted to 450 creators on a particular group called Fanstar, if I were to say, who are tokenizing their creations and ensuring that, that people who view it or people who actually enjoy that can, the whole payment, the system is on the chain, and, you get a reward for the intellectual property that you have created.
All right. This is all very exciting and interesting. And I also want to get to numbers now. And the Boston Consulting Group has estimated that tokenizing real-world assets could become a 16 trillion industry by 2030. How would you look at that? Where do you think that the major push or absorption or adoption will come from?
So, Manisha, if you look at the number and what they have talked about, right? They have talked about how do you look at any real world asset. Okay, so if I take the real world real estate, right, in India, so if you were to even tokenize 10% of that, it actually adds a huge number to it. And I think what the BCG has done, is to look at what is the current real estate value, and they have looked at what fraction could it be, fractionized or tokenized, and putting a kind of a thing of the adoption rate, right? So I believe that it's a pretty realistic number. You can apply the same principles to the Indian real estate sector. And I think the REITs that have been approved by SEBI, the two REITs, different REITs that are there they have the 200 crore, floor, this thing, those also will find an opportunity to be tokenized going forward. So it's a great opportunity. Real estate is only one. You take any real world asset. I gave you the examples of ships. It can be extended to cars. It can be extended to aeroplanes. It could be extended to any real world asset there going forward. So I don't think that the number which they have talked about is difficult to achieve, but the fraction will vary in different countries there. And this is very interesting. This possibly doesn't really face, if it's a non-financial kind of segment, it doesn't face any regulatory hurdles. You only need to get the process in place, because with real estate, the challenge is, is the title genuine, etc., etc. And that's what we are working with. VW is working with the Telangana government to create a whole process around that.
Well, of course, the various state governments in their own jurisdiction are working with a lot of things when it comes to blockchain and tokenization. But, the overall government doesn't really seem very comfortable. What is the attitude that you've seen from the regulators onto this one? Where do you see a gap that needs to be filled by the government?
I think there are three different levels that India is operating on. And I think the first thing is a global level, where we are looking at how can we get a global consensus on different aspects of the regulation, including, under the FATF reporting entities, disclosure of, virtual digital assets held, etc., to look at preventing arbitrage, and people relocating in one different country versus another versus India. So depending on regulatory arbitrage or tax arbitrage. So that's at the global level. And I think we will see some movement happening possibly in the second week of October when the central bank governors and others meet in Marrakesh. The second level is at the national level, where we have different regulations put in place, whether it is the one relating to the anti-money laundering or terrorism, which is everyone has become a reporting entity under the FIU. The second kind of regulation is disclosure and taxation levels of VDAs under the Income Tax Act, and that's a gray area. So a real estate kind of token, whether it falls under a VDA or whether it falls outside, that has to be clarified, and more or less it will be outside that. And then third, at the state level, where state governments, I gave the example of West Bengal, Telangana, in Karnataka, something also happening in Maharashtra, where people have tokenized assets and going ahead, and then the there's no actual regulatory challenge, but carving out a kind of space. It does not fall into the crypto or the cryptocurrency part of it. So at three different levels we see regulation happening, but we believe that the taxation aspect on this has to be cleared, and I think the distinction made between investing in a non-real real asset-backed token versus a real asset-backed token has to be made. NFTs have to be segregated here. And globally, I think even BW is working with the Singapore Association, the MICA, or the EU Association, and the North American Association to get a global taxonomy across tokens, so it becomes very easy for regulation, and we hope to take it to the government soon.
Oh, well, absolutely. While all of this looks doable and very exciting, but as you said, there are various levels that the work is being done on. It's corporates, it's banks, it's financials, it's state governments, and on the global level as well. But yes, there is work being done, and there is a lot of positivity coming in here. Mr. Chenoy, thank you as always for joining us at CNBC-TV18. On that note, it's time for a short break, but don't go anywhere, because this discussion continues with Ashish, Anand of Whrrl Finance and Pranav Maheshwari of Edge and Node when we return. Welcome back. You're watching Tokenomics. I'm Manisha Gupta, and we take the discussion ahead with Ashish Anand, founder and CEO at Whrrl Finance and Whrrl. Ashish, hi. We've understood all about tokenomics and how it works from Dilip, but you are working with a very important stakeholder, that is commodities and farmers. Do tell us on how tokenization has helped this sector. How much worth of commodities have been tokenized on your platform till time?
So thanks first of all, Manisha, for inviting me to this program. So talking about what we have been doing, so essentially we have been helping the farmer segment through tokenization, and while certainly there have been a lot of use cases which have been discussed, this is one use case which brings financial inclusion using tokenization directly to the homes and directly to the economics of the agriculture sector. So we tokenize the agri commodities which are stored in warehouses, typically government warehouses, and we are running two platforms. In the TradFi side, we are running Whrrl. On the DeFi side, we are running Whrrl Finance. And actually, globally, this is the first example of one single protocol working on both traditional finance and decentralized finance using tokenized real world assets. We are today globally the largest commodity tokenization players, and certainly in India we are the largest tokenization players. We have tokenized more than 6,000 crore, almost $650 million worth of commodities which have been stored in warehouses. We have been doing this, much before RWA became so much popular in the crypto world. We started doing that way back in 2020, and during the COVID period, we have given loan of more than 100 crore rupees to the farmers on our platform against tokenized commodities, tokenized real world assets. And let me tell you that while globally the banks are still thinking, doing POC, pilots, etc. on tokenization, in India, banks on our platform are actually lending against tokenized real world assets. And they are lending to farmers using these tokens as a collateral. So that's what we have been doing, and we are actually now launching supply chain finance. We just partnered with MasterCard, and that will be again one of the first examples across the globe to bring credit card against tokenized real world assets. So those are certain plans which we are working on, and certainly DeFi is another angle which we have added.
Oh, absolutely. So, Ashish, when it comes to accessibility, affordability, and reaching to the last mile, you pretty much have done that. Tell us on what the challenges are in this space right now.
Oh, well, so the challenges, of course, have been quite a few. First challenge was to onboard the custodians, custodian warehouses where the agri-commodities could be deposited. The second challenge was, of course, to get the banks to come on board, because this was a new thing, lending against tokenized commodities. So that also took a lot of time, but thankfully now from the banking sector, we have got the credit line of 1,200 crore rupees. So that problem has been solved to a large extent. Another problem which we see is, and which we solved in a very novel way, that how do you explain something like this to a segment like farmer who might not be even digitally savvy or may not be having even a mobile phone. So that is one major challenge which has remained, but for that we have adopted certain measures. We have gone to the doorsteps of the farmers. We have taken the technology to them without telling them that, hey, this is something called NFT backing this. So that is something we are solving. The physical and the digital aspect of this is something which will remain to be solved over a period of time.
Oh, well, absolutely great numbers, Ashish. I mean, as you said, you're globally the biggest when it comes to commodity tokenization and loans to farmers as well. Many kudos to you. Congratulations. And we'll, of course, keep coming back to you for more on that. But let's also bring in Pranav Maheshwari. He's solutions architect at Edge and Node. Pranav, hi. Just so much being done in when it comes to tokenization. How would you look at, a lot of tokenization is underplayed right now. There are some credibility issues as well going into some of these companies. What is the way to look at this? What kind of transparency, credibility would one be watching out for?
Definitely. So first of all, tokenization is something that more than India, the US Fed, as you were talking, is looking into. Mm-hmm. And in my opinion, for them, it's a very big advantage. Because tokenization and real world assets are two things. One is tokenization of assets so that it is accessible. Even if you have $10, you can take a small part of $100 billion infrastructure piece or something. And the second thing is crypto, which is kind of something which makes things global, right? And what stablecoins in the United States have done is that it has taken money from different parts of different countries, including Turkey and Argentina, where inflation is a very big problem, and converted those things to USDC. So people actually get their salary, convert them into USDC, USDT, so that they can, play around inflation. And at the end, the US Treasury and the US bonds are the ones which are benefited, because Circle and Tether invest in the US economy so that they can maintain their 1:1 peg. Now, coming to the tokenization of this, US Treasury bill is the third step towards United States dollarization of cryptocurrency and in general, real world assets. What happens is that United States Treasury bills, or the T-bonds, are the ones which, many organizations like MakerDAO and Centrifuge are actually focusing into. And what they have done is that they have taken the US T-bonds, as collateral, and have issued tokens on top of that. What it means is that a person living in Turkey, a person living in Argentina, which cannot, as of now, could have accessed the United States Treasury bonds, can now go and access those kind of security options, which makes United States in a way very much likelihood a place for keeping assets. On the other hand, for people and citizens like Argentina and Turkey, where inflation is a very big problem, to also get exposed to the US Treasury bill plus get a 5% interest on their USDC and USDT which they have kept, which around right now is at a market cap of about $100 billion. So this tokenization industry in a lot of financial manners, not just non-financial with Dilip ji figured out, is in a bigger state, because now you have such big capital and such big capitalistic country, and everything is being tokenized for everybody other than the United States citizens.
Oh, well, absolutely. So, Pranav, when it comes to common people, normal people, before we start getting into this, what do you think are the technological, operational, logistical challenges to solve?
Definitely. So the real world asset, first of all, is the newest class in the Web3 economics, right? And this is the first time we are taking off-chain stuff, which is like, the infrastructure which does not happen on the blockchain. Infrastructure is in the real world. Or something like United States Treasury bills, which are not at all on-chain. They are rather legal commodity options in a way, right? Similarly, other paintings and Shipfinex doing ships. All these are real world assets. How do you keep these real world assets on-chain is a very big problem. And there are few organizations like Centrifuge trying to solve for that, but there are always middlemen in between. When we call Web3 and blockchain as permissionless, and Ethereum and other such blockchains permissionless, when anybody can list tokens and start trading on it without much of a regulatory, overburden, in real world asset, that's not the case, because you are dealing with real world, things which come under jurisdiction of that particular country. So how do you put those off-chain entities and assets on-chain is a very big question to tackle for real-world asset classes and real-world asset program managers and projects. Then that's something that some projects are trying to solve right now with blockchain oracles, with Chainlink and Redstone. And few are putting and complying some of their legal staff to do something like a Web 2.5 kind of a condition in which real world assets will have legal compliance docs that will be converted into NFTs, and those NFTs will be put into liquidity pools to tokenize everything. So this is like, a kind of a, what I can say is a kind of a compromise on the Web3 standards of real world assets to make tokenization. But again, this is a very up and coming field, and we have just seen a good amount of interest by different mainstream protocols in Web3 like Synthetic and MakerDAO coming into the picture. So we'll still have to figure out and find out good infrastructure so that we can onboard the off-chain entities to on-chain. But again, this is coming and will go through, and as well as get some regulation going around. So should be solvable, but yeah, as of now is a problem.
All right. Pranav, thank you so much for joining us. Well, so much to do and so much to learn in this space and so much to watch out for as well. With that, we've come to the end of this episode of Tokenomics. Thank you so much for watching.